Hi everyone, today I have with me Hart Energy's Emily Patsy, and we have with us Parsley Energy CEO Matt Gallagher. You may recognize him if you are a reader of Oil and Gas Investor from a recent profile and discussion in our April issue. Since then, Matt, of course, been on the forefront of discussions with Texas Railroad Commission, discussion pro rationing and everything that's going on in the markets. Matt, thank you so much for joining us. We want to start off by talking to you about that. Now that pro ration's off the table, give us a little bit of your retrospect thought there, and how do you see shale producers really responding to the demand loss and storage issues?
Well, first off, hi Jessica, and hi Emily. Thanks for having me. It has been a wild ride here over the last couple of months. Kicked off really with the proration effort. Obviously, no action was taken by the Railroad Commission. There's a cut and dry law in the books. We wanted to bring awareness, and we wanted visibility on if they were going to enact that law. We actually thought they should have, but there were varying degrees of opinions going into that process. I think if it could have been done much quicker 5 weeks ago, you would have staved off negative oil pricing. But as the process took so long, it went into the sloppy conditions of each individual company making their own choices. And what you're starting to see now, we're in the middle of earnings season, and you're seeing different people make their own curtailment adjustments to the tune of 10 to 95%. We've talked to some independent operators that are shut in 95%. But going back to the awareness issue, when the proration effort kicked off, you remember Russia and Saudi Arabia were in the middle of a price war. They were not talking to each other. They were not acknowledged that this increased production was put on the market at the exact wrong time for the global producers. This prorationing effort elevated the discussion, the fact that the largest producing state in the largest producing country was actually evaluating cutting production. That helped bring OPEC back to the table sooner. And of course, they eventually got quicker than our state made an opinion on prorationing, but they came back to the table with a 9.7 million barrel a day cut, and at least kept away the absolute worst conditions of these negative pricing or maximum storage, negative pricing lasting for a full month or maximum storage situation occurring.
Matt, what are your thoughts about the regulatory adjustments that were made by the Texas Railroad Commission concerning underground storage? Do you think it will help?
Well, I'm not going to say anything won't help. I think it's immaterial, but I think it was welcome that they at least take some action. But really on the global supply demand imbalance that we're looking at 20 to 30% across the globe, I just don't think that these little adjustments are material. They're kind of a token gesture that they are evaluating ways to help the industry. So we'll take everything we can get, and thankful for that, that they're making headway. So they're evaluating different ways to make administrative burdens less onerous and to add some more storage in the ground. But of course, we have storage in the ground. It's called our reservoirs that have been around for millions of years, and we could just keep it in the ground through not producing it.
Yes, Matt. You talked earlier about how companies in the U.S. shale business the operators are making adjustments due to the price drop. I was wondering, what plans does Parsley have for maneuvering through the short-term losses on price? And also, what can you tell us about Parsley's longer-term outlook?
Sure. Well, it's an evolving model, but number one stance is first, let's make sure our people and our contractors are safe. Of course, we're fighting this on two fronts. We have the COVID issue and we have the price collapse issue. So it's very clear. For a couple of months ago, we put a crisis management team together and made new processes and procedures to deal with COVID safely and continue our operations. We're, of course, here remote work as with everyone else, but that started on March 13th for us. So I think we're in day 57, 58 right now. It's going pretty smooth. But back on the business front, we had to protect the balance sheet. Very early on, we made a decision to hedge 75% plus of our production into 2021. As all shale companies, we do have a level of debt. We have $2.7 billion of debt, which compared to our cash flows are modest and manageable, sub 2.0 times. And we want to keep it that way and protect that. So we saw situations with asymmetric outcomes, essentially. And if we didn't protect that very quickly, we didn't want that leverage ratio to expand. So we're in a fortunate position where our producing wells can pay off that debt over time in a suppressed oil price environment. So we wanted to protect that. Separately, we had to go through our entire cost structure and do rebidding work with our vendors. That was a very collaborative effort and an urgent effort. And I commend our vendor partners for taking it seriously, getting it back to us with actually some very strong and pragmatic numbers. It allowed us to continue some activity in the short term. But eventually, with the magnitude of the demand drop and the fact that we were going into proration conditions, we had to cut our capex until we can get up to full steam on production. But again, those bids are definitely going to help us come out of this sooner than we would have in a previous case. So I commend the vendor partners on that front. And then every rock internal to the company, you're looking at every line item and disposing of waste anywhere you can. So meals, travel, and entertainment, things like that have come down dramatically. Obviously, business travel is coming down dramatically, and software solutions that we had in the queue, long-term projects, corporate projects that we had in the queue, those are all press pause on all of those temporarily.
It was announced in Parsley's earnings that the company had temporarily suspended all new drilling and completion operations last month as a result of the regional oil prices dropping below $20 a barrel. At what price do you think Parsley can start drilling again and reactivate operations? And what are you hearing from your reservoir engineers?
Sure. Early on, that number would have been probably $35 before we'd feel comfortable sanctioning a new engagement of a $60 million multi-well pad project. You want to go into it with a little bit of certainty on your returns and that you're covering your cost of capital. Due to these vendor rebids that we discussed, we have a high-graded suite of projects that we believe we can get active again in the $30 range and feel comfortable that there's a sufficient return trade-off where we can, over and above our cost of capital, generate healthy returns and generate growing free cash flow. But that's at a static condition. We have to work through, we have to look at the macro conditions of what global storage levels are doing and what the shape of the curve is doing and what our production curtailments are doing. We want to get all wells back online. So it'll be a feathered process back in, but just on a spreadsheet, we could work again in the $30 environment.
Do you know, or can you tell when that would be, or is it just waiting and see how the market goes?
Well, our current view, of course, it changes, seems like hourly and daily, but we're very encouraged by the reopening of economies across the globe, and especially here in Texas. We're looking at the driving statistics. If you just pull up Apple Mobility, they have a great website where you can track some of this driving rebound, and it has bottomed. So we do believe that the global demand has firmly bottomed. So we think that with these supply restrictions, we are going to balance more closely global inventories and actually have some drawdowns in the back half of the year. So we'll be working from a much higher level, but we'll start to see some drawdowns. That would give us comfort to turn these wells back on as soon as June, even if on the producing side, and then get back into a couple rigs of activity in early third quarter. That would be July timeframe. And we break out those couple of rigs, we'd assess the market, and we break out a subsequent couple of rigs going into the fourth quarter. And that provides us with a healthy, stabilized case. We're able to keep our production flat at those levels for a very low capital amount, around $600 million for the foreseeable future, if that case unfolds.
Well, thank you for that. And moving on to ESG, we know Parsley's history in the Permian, and you have been vocal and serious about implementing an ESG plan since becoming CEO. And it seems like ages now, but I saw you at NABE, you gave a speech on the topic in February calling for the new Shale deal. How important is that conversation now, and how are those initiatives still moving forward?
Well, there's no doubt in the first 3 weeks when we were responding to the pandemic, it was in triage mode, and you had to go into the health of your employees, health of your business model, and protect that. Once we got through triage mode, I think this actually remagnifies the importance of ESG. It's going to really truly separate the haves from the have-nots, and not only within the U.S. industry, but the U.S. from the global players as well. I think there's something to really be said that we should look at where we get our energy from and how the social governance is for these companies and these countries. And I think by holding ourselves at the highest standards and delivering on our promises, people can feel good about utilizing our products to enjoy their way of life, enjoy the mobility and the comfort that they've become used to. They've used to have to make I don't quite look at it where it's coming from, because I'm not sure I want to hear the answers of how those countries are treating their employees, et cetera. So this is a homegrown product here in West Texas. It helped us rebound out of the last great recession with great employment, hardworking individuals out in West Texas, great paying jobs. And on top of that, we're improving the way we do it from an environmental standpoint. A, we have to acknowledge it, which we're doing a much better job of as an industry. And then B, we have to act on it. So I'm proud that we set a goal for our company after our Jagged Peak acquisition to get down below 2.5% on a flaring basis. And even in the face of the pandemic, we were able to achieve that goal. We wanted to get there by December. We were able to achieve that goal in April, and we'll be on a run rate far below 1% on a go-forward basis. So I think these times of crisis actually define reputations of companies and industries, and now's the time to showcase ESG strong suits for individual companies like Parsley and the industry, the domestic industry as a whole.
Thank you so much for sharing those thoughts with us, Matt, and your work toward that as well. Appreciated in the industry, I know. Can I talk to you about technology? What do you think, how do companies, I guess, deal with that developing of technology now, during this time, but then maybe moving forward? Will we see new things come? There's a lot, of course, we don't know, but what might work? And, a lot of companies are having to look at being more efficient and things that they can do to get that way.
It's a great question. Necessity is the mother of invention, and I believe that the latest invention and the capability front we're going to see is on the technology side. We're seeing, as we're here today on a Zoom interview, I don't think anybody even knew what Zoom was 3 months ago, and it's working flawlessly. At the company, we use Microsoft Teams and Office 365, and we've actually been blown away by our productivity from a remote basis, able to share documents, edit documents on the fly, and it's all captured right there. And then we can push that on to a project scale with our rigs and with our frac crews, and we can have seamless handoff of data. We have master data management and golden identifiers and attributes within the company. That's been a big effort for us over the last 18 months, and it's really shining bright through right now. So we had one rig running on this kind of AI platform in 2019. As we went into 2020, we scaled it across all of our rigs. And of course, we ended, tell our operational teams, we went out on a high note. We ended with the best operational efficiency that we've been able to print as a public company. So really proud with the momentum we had. And all of that was leveraged on the back of real-time data, real-time information, and using AI and really the latest and greatest technology. So there'll be continued breakthroughs in that. You get to work in these downtimes on your standard operating procedures and come back with a clean and crisp business plan, refocused, and then able to imprint all these technological advances on top of it. So this industry has always rebounded and always, especially the American wildcatters, the American oil and gas industry, has always found a way to innovate and come out better than before during these downturns.
Matt, you mentioned the Jagged Peak acquisition earlier, and I know, so that's a large acquisition for Parsley, so I'm not sure that y'all are looking for any more deals, but do you think companies will be looking to diversify their assets at this time, both in terms of where they develop and what they produce, maybe looking international for opportunities?
Yeah, I think it's it's a good question. It's a little too early, I think, to get there. I think there's still a long runway of opportunity sets in the shale. So really, it's not diversification of assets. It's focusing on low cost assets, and we're going to have to do that as an industry for a long time. And it's going to be a fight for the lowest cost assets and the highest returns. Currently, anything of scale that is still in the Permian Basin. So I think people are still looking to develop most aggressively in the Permian Basin. On top of that, maybe not diversification of your physical asset, but your diversification of your marketing capabilities and your midstream capabilities has really been a high note here over this crisis, when we saw storage get to such tight conditions and you see these little islands of gridlock. You saw Cushing start to fill up. You saw a reversal of a pipeline from Houston back up to Cushing, starting to fill that up. And then that relieved Midland pricing and Magellan East Houston pricing. So you will see diversification of getting that product to market, but I think the focus is absolutely going to be on low cost assets, and currently that's in the Permian if you're looking at anything of scale.
I think the whole industry is in a world of hurt right now, including operator service and other related vendors. Can you comment on Parsley's relationships with its preferred service companies, and how important are those relationships in balancing driving cost efficiencies while trying to help make sure those companies stay in business?
It's absolutely devastating. It's something we were very worried about 5 weeks ago now, going into proration. And it was hard to wrap your head around how would proration actually help the service sector. And our belief was if we could cut these barrels soon enough, you could keep a stabilized base of activity, or at least the country would be able to reactivate activity a little bit sooner to that stabilized level, especially if those type of cuts were going to compel other countries to cut as well. You've since seen Norway cut, you've seen some hesitance from Mexico, but you have seen other cuts across the globe. So it wasn't about maintaining the current levels of activity, it was about trying not to get down to zero. And if these service companies could maintain a base level of work, they can keep their cash flow, their employees, a percentage of their employees afloat, and it keeps that muscle memory working and keeps things better and healthier on the come out of this pandemic. Unfortunately, it didn't occur quickly enough, and you're starting to see this absolute shutdown. I think we hit a record low on rig rates today, even prior to the 2015 and 16 downturn. So you are going to see significant amount of service company bankruptcies and consolidation. What I'm also worried about is their cost and access to capital coming out of this. That just gets pushed through the system all the way back up to the operators. We have to have those vendor partners, and I don't want to just be doing business with two of the largest, because when we look at the efficiency and the innovation, it was brought to us by great entrepreneurs and business-minded innovators from the private business sector, and they've been great partners over time. So we have tried to do some rework of their actual their traditional vertical skill set and keep some work going on some other levels. But honestly, it's not at a magnitude that's going to be able to allow them to continue their operations for any sustained period of time. So our biggest hope now is that we can make the cuts that can realign supply demand quickly enough, and we can get back to that activity here in the July timeframe, that they don't have to go 6 months without any activity.
And thank you for that, Matt. You touched on, of course, this being devastating to watch over the past several weeks. As a leader in our industry and someone who cares about the industry so much, can you share a message, on the personal side, but also looking forward, how companies get through this and make it on the other side, since we don't know how long all this will take to recover, if you will?
That's right. Something we share with our employees, and it was even on our slides, enduring with relevance, and that wasn't there by accident. And what did endure mean is something we've been talking about at the Monday morning management meetings. And there's a whole human component of this, and there's a lot of people, everybody's going through a unique time in their lives, but there's very devastating impacts across the country, and especially here in Texas. So we have to look at it pragmatically and through the lens of endurance. And endurance is the ability to withstand great hardship or pain, and the ability to continue on in conditions of high stress and adverse conditions. And the reality is that's going to be the mode that this industry has to work through for the coming couple of years. And we can't get false hope, but we have to be pragmatic. We have to buckle up, lock arms together as an industry, come slim down our costs of the corporate system, and we will be able to endure with relevance and come out of this on the other side. Our industry's done it time and time again. We're no strangers to it. We just have to be able to be ready for a little rougher go of it this time.
Matt, we really appreciate your time, and I can speak for Emily and I think in Hard Energy. Thank you for your work for the industry and for taking this time to talk with us as well.
Thank you, Emily. Thank you, Jessica. Really appreciate it.
For more Hard Energy videos, follow our social media channels.